We're talking about managing a trade, which is the most difficult part. Every trader will tell you that entering a profitable trade is fairly simple, but exiting, there are a lot of things going on, greed or like fear. So it's not easy. This to remain quite objective actually. So right, still we have identified a relatively simplified protocol to enter a trade, to let's say to determine the entry point. Here we have an example which is basically actually two examples which are the most recurring trend and counter trend. In the trend setup we possibly enter 3 times, so 3 equally small trades. One could be as the retracement 50 or 40% Fibonacci of the pin bar, and the other one, the standard one, would be at the break of the nose, and the other one a bit below the first one. These are not ending positions. These basically belong to one position, but they are split in 3 in order to optimize profit and minimize risk. With counter trend, this step is possibly to be avoided. It remains, let's say, kind of between brackets. It remains optional, because the price might indeed push against our position and follow the trend. The other standard entry remains the break of the nose, a bit below, of course. That's we were talking about the position management, trade management. It's a conceptual step, but also operational. That's why it makes quite complex. And there are, I would say, there are at least 4 criteria we have identified. One is very simple: set and forget. So you determine you take profit and stop and loss. You put a lot of effort into it, and then you leave it go. You let it go. Either it goes your favor or against you. Doesn't matter. The first which hits your parameters, either the stop or the profit, and here you go. The other one is trade to break even. It's fairly common. Once you have reached one risk profit, you break even. The other one is something proprietary that we have identified at Itagra. It's managing the trade over 5 candles basically, which is the week. If we talk about the daily candles, so if the trade didn't close within 5 days or within 5 candles, it has to be objectively assessed. Then trail stop in case of counter signal. This is quite a complex one. We explain them quite in detail in the member section, in the introduction, the presentation for members and advanced traders. They're quite complex, I must say. So we have also developed a pragmatic approach as well for exiting. It takes into account basically 2 parameters. One is the average true range, and the other one is the related volatility. So how much a pair is expected to move in our favor or even against, but in this case we are talking about exiting in profit, so in our favor. So here's the concept. The concept is basically the very recurring model 1, 2, 3. There is one direction, one strong move in our direction, then little small pullback, and then the move again, the final move. So basically this is being studied and developed in order to see when to enter. So basically we talk about entering entering the market here, as long as there is price action, basically after we identify, and then we take profit after certain volatility occurs, and then as long as there is a retracement plus price action, we enter a second position, which is here. And basically the maximum average true range should be here. So the maximum we expect the currency or the instrument to move would be here. So it can be adjusted, but what we have basically spotted is the take profit can be identified as we said, the volatility ratio, the minimum to risk profit, and close or very close key level, key support or key resistance. Sorry about that. Trading checklist for members. Yeah, these are something let's say we want to share with people who want definitely to go through our strategy and to want eventually become members to take their trading to the next level. Right, money management is a big topic. It's the way of keeping your business running and at the same time making profits. So it's key, guys. It's key. Just focus on it. Develop your own money management. Get inspired about our money management or whatever it is, but develop a very solid one. Here the equation is quite straightforward actually. What's very important is to notice that the risk per trade is something that we can definitely fix ourselves. Fairly common, it's indeed the 4%. Sorry, I was saying the 4% fixed parameter. Fixed risk per trade. It can be a bit higher. I would say 5, 6, even a bit higher, but that's up to you. Basically, I would not go much lower than 2. 3. I will not go much higher than 7, 8. Then risk reward, as we said, we risk 1 to make at least 2, if not 3. Win ratio, it's something we cannot really control, but we definitely want to achieve at least 56%. We have as target 75% within our group. Trade per week, it's a bit on the optimistic. I would say 7 per week, but certainly between 4 and 5 trades per week. And then this is the calculation how much you would make per week and per month. As we said, this is still a bit on a high side, but our target is to achieve at least 80% on a monthly basis. Right, we cover trading specials. It's also for advanced traders. It's basically trading live events, which is very difficult, very fast, and at the same time emotional. That's why psychology of the market, psychology of the market. Sorry about that. Is crucial. And trading commodities, oil, gold, but also corn, coffee, or wheat, or any other type of commodity is quite lucrative, but very difficult because they have special moves. There is a lot of volumes involved. So here you have it again, the list of the very, very important events that are worthy trading. Now we come to a very sensitive topic, which is the pitfalls. Trading is hard. It's very hard in the sense at least psychologically, because it requires a lot of skills, and it requires first of all to face the fact that you have to master your emotions and your psychology. So everything that is close to gambling, let's say, is no good. So if you get overexcited, frustrated, too confident, you get really scared or stressed, greed, that's no good. All these are no good, very much bad actually. And then there are operational pitfalls. They're more related to the fact if you make mistakes in placing your orders, really execution mistakes, well, they're very costly. So double check with the checklists and make sure that you understand all the requirements to basically execute your trade at the best. Well, this is an explanation of what exciter leads in trading. Basically, it leads so many things that at the end of the day, the only outcome is a disaster. Fear, the same, it paralyzes you, so you cannot already make any good move and take the right risk. Right, I think we are done. Okay, here it goes through the same operational executional pitfalls. Last but not least, the GAUSS curve. It's a curve that's funny wise it's very suitable for overtrading in trading. So extremely or trading too often. Basically, if you look at the GAUSS curve, it looks very complicated, a lot of parameters, but it's fairly simple. Basically, see the axis as the number of trades. So if you stick to 1/3 of the trades, but the right ones, so we are talking about only this part, which is, I would say, this is 1, this is 2, and this is 3, so it's 1/3 maximum, 1/3 of the trades or less. These account for, you can see this is the profit, these are the losses. These account for this area, which is 70% or more than basically 70% of your profits. So you don't need to go into every possible trades to make the profits. You need to stick to the ones that have highest probability. These are risky because the loss is quite possible, let's say. Alright, so we are done, and if you have any questions, just go on our website. There are a few areas where you can address questions with some forms, contact forms, or you can send us an email, generic email. You're welcome also if you want to join us as a trader or analysts. Of course, there is a complete procedure for that. Just have a look at the site and apply accordingly. For the rest, we are pretty much open to share all the information, at least for the next 2 months, completely for free on our website, and we hope you enjoy and you come back eventually with some good feedback. Happy trading to everyone. Bye bye.